Then Ivar Lammers, Global Head of Financial Crime at ING Bank. Ivar, if you would like to take the session away.
I will, thanks. First of all, I'm Global Head of Financial Crime, Wholesale Banking. Why this is important is the cases and typologies that I'm going to be using in my presentation to make the points that I intend to. By the way, can you hear me okay?
Yeah.
Yes. Cool. Are going to be on wholesale, so larger corporates and financial institution cases, not private individuals or small medium enterprises. Now what we're going to be talking about is exactly this. Getting the basics in order. Now why do I want to put that point forward? It is simply because a lot of good things are happening. The basics are getting in order with financial institutions, and we see a wave, a positive way of high-tech solutions evolving in the industry to be way better at what we need to do than we were in the past as an industry, not just financial institutions, as a total industry. However, what we see here, while everybody is rightfully so excited on the perspective and relevance, very important, of the next generation financial crime prevention capabilities, we cannot lose focus on the cruciality of having the basics in order. And yes, we've got basics in order, I feel, as financial institutions. It's been bumpy, as we all know. However, there's an important point that we're going to make, and that's what I'm going to be doing through the following agenda. So I'm going to be sharing a refresh. What is financial crime for a gatekeeper as a financial institution? What do we need to do? Very high over. Then I'm going to double click on one of the financial crime controls, which is referred to as KYC. That's going to be boring, but very important. After which, I'm going to share, also using a video to save some time, what next-gen FinCrime solutions are and what they do. They use your data. So if you don't have your data in order, it goes at the cost of effectiveness. So we're going to show that. Then we're going to go back to, okay, what does it then mean to have your basics in order? What does it mean in volume of work? How are we restricted in getting there? What are the challenges? And then we're going to go into how at least we, but also the rest of the financial institutions are moving towards how we get that done. And the concept that we're going to be talking towards in the fourth point is going to be perpetual, so ongoing KYC with event-driven reviewing. That's the concept that we're going to be talking towards. So first of all here, this is extremely high over the cycle that we need to go through on an annual basis as a financial institution. On the left you see a risk appetite statement, and that is something that we need to kind of deposit to our regulators on an annual basis. Now what is a risk appetite statement? Yes, I want to do business with payment service providers, however, to the extent that I don't have gaming or adult industries as part of the payment flow that I'm processing through the account that PSP is holding with me. In order to be able to detect that, I need to have three controls in place. Knowing your customer. Knowing your customer, we're going to double click on that in a second, so I'm going to move further. I need to do screening. Screening typically consists out of terrorists, politically exposed persons, adverse media, and a couple of other angles, but I need to screen who I'm dealing with, both in entity and in private individual. Then, last but certainly not least, the activity we need to monitor. And if we do not do the first one right, the other two won't work. At the end of the year, we need to data-driven report to the regulator, did we actually meet that risk appetite statement? And where did we not? And if we did it, it's not the biggest problem in itself, because we need to be a learning ecosystem, but we need to implement the learnings in those three capabilities. So, where I started with, these capabilities need to be effective. That's the whole point also of the presentation. So now, the most boring slide, but the most important slide. We do a KYC, so the one reverts to the one on the prior page, and we do screening and monitoring. Now, what do we do in a KYC? Essentially three things. First, we need to know the identification and verification of the ownership structure, meaning the ownership and control of the client. Essentially, it is double-clicking on an entity, and in wholesale banking, a customer could be up to 1,000 entities. On average, it's towards 100, and you would need to know all kinds of data. So, article of incorporation, do you exist? What is the name of the entity? What is the former name of the entity? Who are the main principals? CEO, CFO? Who's the ultimate beneficiary owner? I can go on and on and on, but that is going to take too much time. Why? And why? What happens if I'm wrong about this? Sanction screening will no longer work. If I've captured Morten, where's Morten? I don't see Morten, as a CEO of a company instead of Ivar, for whatever reason, or as a prior one, and Ivar should be the CEO in the system that we're monitoring, but Morten is still there and Ivar is on a sanction list, you've got a problem, right? So that needs to be very correct. Secondly, the behavior. that essentially are three matrices: products versus jurisdictions, trade, derivatives, markets, lending, guarantees, whatever it is, to know what products am I dealing with where, to understand the product requirements from financial crime perspective, but also the local regulatory requirements. We are, as ING, under the Dutch Central Bank, but we are active in 42 jurisdictions, so we also have, for instance, the BaFin in Germany or the MAS in Singapore, etc., etc. We need to know. Last but not least, I can identify Morten as the CEO of a company, but I need to, through an independent, verifiable source, evidence, and have the evidence that Morten is who he says he is. And that is crucial. So the third part, and this is where the client centricity comes in, typically we need to go to for clients. So we need a copy of your ID. Dear customer, we see that we haven't identified 30% of your ownership because you haven't represented yourselves in the trade registers. That might be a trust. I need to have a trust letter, which is a formal document that explains by the trustee who the ultimate beneficiary is or are beyond the trust. I can go on and on. So what we see is the first part under one, typically public sources. We browse around with a huge operation to capture on thousands of entities a year the entire ID&V, ownership and control part. Okay? A lot of work. Two is typically private data, where one is more public data, trade registers, trusted sources, market, etc. Two is more systems of record. You go to your own product systems. A lot of work if you haven't digitized that properly, if you don't have that customer 360 view. Three, we need to go to the customer. That is very sensitive, and I'm trying to read some body language, but I guess people have their own experiences with KYC to a bank. I have my own, including ING, by the way. This is hard, so we need to be better at this. We need to probably do much more work in the future, so it needs to be more digitized, repetitive, and we need to be much more client-centric because, and I don't want to go down that avenue, but ESG is going to come in, fraud, cybercrime, together with ESG and financial crime. Those pillars are going to be bridged rather sooner than later. So the data is going to even, maybe I should use the word explode, but that's. The monitoring part I haven't yet touched upon. So yes, we need to have the ID&V to understand who we are screening, politically exposed persons, terrorist lists. We also need to understand what the typical behavior of the customer is. So easy example, if you would have the company restaurant of Philips in our books as one of the clients, you would expect an equivalent of 1,000 sandwiches a day, right? You don't expect foreign currency to go as a transaction to Asia, just for the sake of an example. So you need to have that ex ante in place, East Sol, if you will, to understand how did my customer identify him or herself to me, what do I see as a behavior, and does it match? If not, I've got a flag. And I can only test whether that matches if I have a continuous view of the customer and not what typical happens across the industry every 1, 3, or 5 years. That's the boring bit. So what does it mean? To be a bit quick, because I think we already over time out of the last sessions, it means that we monitor easy over 1.5 million data points a year. Name, postal address, date of birth, aliases, indirect influence or control, all these kinds of things we need to capture. And this is a very low number, but I wanted to make it still a little bit easy and have round numbers. And we, as financial institutions, and probably also PSPs by now, have a huge workforce working on this. So it's fragile. It's today not really data-driven. It's very highly intensive in terms of labor, and we need to do a lot of work here. Now we're going to go to the next part. So now we're going to go into understanding that this is a challenge, and yes, we've got it under control, I feel, as financial institutions, to do this the way we do it today. Now we're going to check into the next-gen solutions, and then we're going to go back to this. What I'm going to do is I'm going to pull you through an extremely simplified money laundering schema, just for the sake of making the point around data. So for the fact nerds in the room, this is not going to be very sexy, but it helps to make the point. So let's assume we've got this client, 2 entities and an ultimate parent on top. We have recently reviewed it, and let's assume we are a financial institution that reviews a normal risk client every 3 years. We've captured all the data points, we're good for the next 3 years. It sits as a static file into our systems. But what if 2 or 3 months after a new UBO approaches? Does a transaction of shares, becomes UBO, has influence and control over that company? We wouldn't see it well, the relationship manager could say, hey, I've got new information. I think we're all aware that, if it's on humans, and especially also front office, which typically have a different task, not meant cynically, by the way, this is a challenge that we've got. You cannot depend on the front office or relationship manager to always capture the data point. However, if we would be monitoring that specifically, would also see between another company and our customer in an entity, see a repetitive payment kicking in with an equal sum. That could easily be a redemption, a quick redemption in this case of a loan. Now, your typical transaction monitoring systems could pick this up, don't always, because it would also deliver a lot of false positives, so it might not, but it doesn't explicitly combine that with your new UBO if you haven't captured that, right? So now this is where the next-gen capability kicks in. What a next-gen capability typically does, it double-clicks here on the second company A. And double-clicking meaning it pulls that entity through all the sources that they can find and that you allow, or your compliance department allows. And by doing this, the following happens. You get a line of sight on that entire company. And you can then, obviously not always, I'm oversimplifying, I am creating a simplified case here, you could detect the UBO. And that UBO of the company between your current client and that company of which the loan is going on, or seems to be going on, could be the same UBO. Now that is quite scary, because it's a closed economy. It's a hidden economy, so if you will. And in hidden economies, you would want to see, are goods and finances going in the same direction? Are there U-turns happening, or goods or finances? Or maybe, looking at screening, what if that UBO in that first media screening is connected to the proceeds of money laundering? Yeah? Drug trafficking, human trafficking, whatever it is. That is what next-gen capabilities high over do. Now, how does it work? And this is where I made it easy on myself. This is a visualization of Contexa. There are other capabilities that do the same. It does continuously all the double-clicking. It connects by your KYC captured data points to the broader social diagram of your customer. And it can create that kind of as far as you want to go, because you typically look at the client of your client, but if you take up the annual statement of the client of your client, you could also see financial flows and other companies that they are dealing with and do the same thing there. You can go on and on and on. And that is what's happening in these solutions. Now, how do they do it? They take your KYC data and combine it with public data. Not on your own clients so much, because that's something you've already done, but on the clients of your client. And that's where the social graphing kicks in. And that is what these solutions do. So far, so good? Cool. Now the question is, if we would only after 3 years have KYC this customer of ours, would we have seen that new UBO? Maybe, probably not. If we would only depend on our more mechanical transaction monitoring, would we have seen the repetitive payment going out to that other company, which we're unaware of? Probably not. Maybe. Could we see the correlation of those two events? No. So what is then the relevancy of implementing such a capability? Isn't that gonna, on the one hand, so next-gen capability, creating a lot of false positives and also not capturing what they should be capturing because you don't have your data in order? Yeah, that is actually a risk that we are dealing with here. And that is also the point here. So yeah, we are all looking forward to start using this, narrow down the false positives, capture hidden economies or hidden situations that we have not been able to see with just our own data of our customer and what the customer does with us. So it opens up a wide range of options. However, if we don't have the data in order, we have a problem. So going to the conclusion, to enable the next gen, we need to move to perpetual KYC. And perpetual means ongoing, and ongoing in this case means, for instance, every month. But in order to do that, if it's already so hard to do 1.5 million data points a year with such a large workforce, the way we do it today, if you would do it monthly, you would need to do that by 12. And even more data points. So you get to, a quick math that I did was a 3,600% of the work. Well, I think we can all agree that's undoable, right? So we need to move into our next evolutionary phase, which we all can. KYC must become a more digital and also data-driven process. Data-driven meaning we need to capture the individual data points being it the ones that I mentioned. So it could be an industry code, could be an address, could be the name of my principal, could be this customer does trade in Singapore, has a lending facility in Germany, and we booked it in Netherlands for the sake of our capital position there. Could be all kinds of things, but we need to continuously monitor those things. Why? Important, because if we don't, we miss the right data. So if we don't capture the UBO, we don't have screening. If we don't capture the products, we can't correlate it with an event. If we are not able to capture the individual data points, when we need to assess a situation, we need to do the entirety of the customer in its entire universe. If we know the data and we can bounce it off towards the new data points, we can very specifically, chirurgically identify, okay, we've got a new CFO, we've got a new product emerging as of that new CFO, we now have a specific situation that we need to look into. Okay? But then, what are the challenges, right? Also here I summarize a little bit using some cartooning. So bear with me. The challenge, I'm not going to say problem, but that we have is we are in mid-flight. So on an annual calendar, which I opened with, you need to do so many entities because they expire. They have simply an expiry date. And the supervisory bodies are going to enforce you, rightfully so, to, before the expiry date, rectify the KYC statuses, meaning you need to redo the CDD. So how do you, in mid-flight, change the engine? And the answer here probably is, at least that's how we are doing it now, work ahead of the curve. So temporarily invest on customers that further down the avenue would expire, not tomorrow, also not the day after tomorrow, maybe next year or end of the year, to ahead of the curve, digitize the customer files, update them so that you can only need to do a targeted review on the specific changes that you've seen in the entirety of the client. How do you establish that? And how do you reduce the data collection effort? Well, actually, by doing that. So if you use technology, and let's take the example of identification, verification of the ownership structure, where you can actually connect all the market sources. And I dare to say that, I can't be specific, obviously, but we have over 200 trusted, reliable sources that we are allowed to use by our compliance department. Today we do that manually, but how that works, if I need to open an entity, let's just say it's a French entity, part of a larger Dutch international. I create the entirety of the legal tree using a global source. Could be Bureau van Dijk, Dun & Bradstreet, Bloomberg, whatever. Depending on the article of incorporation of that entity, in this case French, I would overlay that data with the legal trusted source from that jurisdiction, which is Infograph, the local trade register. That is easy. Same in Netherlands. In some countries, Eastern Europe, you have multiple sources that have a hierarchy. A primary, if you can't find it there, you've got a secondary, and then you've got others, which you can still automate. And this is kind of where I'm not going to say Gen AI, but AI kicks in. Then there's a last version. I think the US is one of the examples where we've got 10 sources that we can use, no hierarchy. So if you then have multiple, for one single data point, multiple values out of different sources, you need to do kind of an alert handling by an analyst. But that we can all automate. And then we have all the data points captured rather than somebody browsing through all those trade registers manually and building in a PowerPoint or a flowchart the entirety of the legal structure of the client. That's a completely different universe. So that is what we need to be moving towards. If we continue to push paper, just for the sake of pushing paper, and I think it's easy to say, I'm also looking at my colleague from the Rabobank, it's easy to say hundreds of pages for a large international client per entity. I've seen legal structures of just shy of 100 entities that were up to 15,000 pages of melted PDF documents because articles of corporations, trust letters, copies passports, whatever you have, it goes into what is currently called a CDD pack. And that is not really digital retrievable. And in terms of client centricity, you could not go back to the client to say, this is the copy passport that we've got of you. Could you please reconfirm that this is actually the most recent copy passport? I could still be the CFO to the same company, but I could have moved from Amsterdam to Curaçao, putting me in a high-risk jurisdiction. Yeah, we still need to do that. We can be much more client-centric and much more data-driven to not go through the entirety of the paper if we capture the individual data points and on a monthly basis verify that to the new values to those same data points. If we don't, well, I think this speaks for itself, right? The 3,600%, we are now actually competing in the employee market on the same resources because the work increases. Every now and then, yes, it's said cynically, but we do get into a small or larger remediation. We have had a very large one behind us. We still have new ones every now and then. And constructively and rightfully so, because things are found, right? That is part of our job. So, getting your basics in order. How do we get there? Now I'm going to show a picture here on screen right now, which I would need to explain. In the beginning, I elaborated on 3 activities that we need to do in KYC. So I'm not talking sanction screening or activity modeling. This is really your KYC to enable the other 2 controls. Okay? Identification and verification of the ownership structure. We use Black Swan Technologies as our data hub. This is the data hub in which we combine those over 200 sources with the hierarchy in the different versions of jurisdictions to secure, overseen by the second line of defense, that we are applying the right sources to that specific entity in a larger legal structure. We capture all those data points, both in the hub and in our systems of record. Why also in that data hub? Because the data hub needs to know what they sent us the month before and what they're sending us this month, because I only want to see the deltas. Otherwise, the processing gets really heavy, right? We ping every source on a daily basis. Are you available? Is your data format changed? And do you, at the end of the day, send the same data points for the same customer? Integrity for all the 200 plus sources. Very important. On the occasion that I can't find, for the sake of an example, 30% of the ownership because it's not listed, regulated, you have a distillate out of the system. And it gives you the list of distillates of elements that they couldn't find. So if there would be an unidentified part of the ownership, it would spit that out. It goes into your client outreach, which is the 3rd one, which we get into in a second. If we have missed, bad example, but an article incorporation, which you typically could get out of these kind of technologies, it lists it. This is something we're missing. So we explicitly know in an automated run with digitized data what information we are missing in line with our financial economic crime policy, which we can then bridge to the client outreach. The same thing is what we're doing on the activities. So the upper screen and the middle screen is a visualization of all the, these are payment flows from and to jurisdictions. We also have, and that's the lower part, accounts from and to jurisdictions, and we also have one from products against jurisdictions, and a list of booking initiating officers as a product of all of that. That's the same thing. It bounces off every month. Does this client that typically did lending, lowest product, in the lowest jurisdiction, now all of a sudden had an export LC to a highest jurisdiction? Because I need to know, and not in 3 years from now, I need to know it like this month, right? That's what that does. Now, if a new product or a new jurisdiction would emerge, you would also have requirements that you don't typically have in your file. It's named an uplift that you need to do. Also goes to client outreach. Now, very important, when we implement a customer, because this is client simplicity, when we implement a customer in this way of working, we don't just go to the client outreach. What we do is we first slice the old evidence pack that we had of the client, all the trust letters, all the articles of corporations, all the IDs, etc. And we data label them and put them back into the repository. And the repository being our own system, but also the 3rd one, Corp ID. In Corp ID in a nutshell, Corp ID is a vault, C-level 4 data compliant, that is owned by the customer. The customer puts the KYC information in that vault and can give the key of that information to any financial service provider that they are dealing with. So yes, it's a product that typically thrives in multi-bank corporates, maybe not so much in business banking, but it works as well there. But then you could also have your local channel. What we see happening today is that a strong preference is going to this way of working. By the way, why? Need to put this carefully. There's a lot of information exchange happening over open Microsoft Outlook. Copies passport, trust letters. You can imagine, right, if that gets hacked. A couple of months ago, just on one email, a Spanish bank got a penalty of 2.5 million euros. We don't want that to happen. So we're actively coaching our customer to use the safe portal to avoid these kinds of things from happening. It also allows us to reissue already documents that we had before to make it much more client-centric and not do cold calls on copy passports, for instance. Now, very importantly, cross-link you see in the picture. So, where we have the 2 steps, identity, behavior, followed up by client outreach, we need to know what we need to outreach upon. So we've got all the elements connected to each other in an intelligent workflow system that also includes a rule engine. And Again, this is the area where we cannot become very specific, but over 1,000 rules. So these are all if-then else's that are in there. So it says if your client is in Article of Corporation lowest jurisdiction, but the main principles are in high-risk jurisdictions, and if you've got product A, B, or C, you would need to have this or that information. That's what the rule engine does. Yeah? Up till here, you don't even get to a CDD review. So you don't yet review all that information against financial economic crime policy, because that happens afterwards. But the point is, if I implement this, which we have, and you arrive at this stage, you've got your file digitized per data point, repetitive month on month, allowing you to see at any given time in the client lifecycle what data points changed when and which decision in the audit trail of crosslink you have made on that situation, which is an appendix to your CDD pack. And that puts you in a position to kind of get all the work that you shouldn't be doing out, which is too manual, to one-off, like the melted PDF part that we said, and really put your operation where it needs to happen. Now, before moving on, maybe crosslink, if you have a question on crosslink, Viet Nguyen is over there with a colleague, CEO, CTO, if I'm correct. So if you've got any questions there. Corpady is also in the room. I see Bart, and Job and Hamer. Black Swan couldn't be here. Domino is internally. So if you've got questions, please reach out to them. If you've got questions on Quantexa, by the way, I saw over there, Rob Kuiper is leading Quantexa for Wholesale Bank with us in ING. So if you've got questions there, please also go to him. Now I lost the final point that I wanted to make. Oh yeah, here we go. So typically, I'm going to pull it towards the industry to not be specific about ING if you can appreciate. If you look at the amount of CDDs that we do in a year, let's just take a calendar year, you would typically see that approximately 70% of those CDDs did not have a material change. Of the 30% that did have a change, approximately half had a risk reduction, business reduced at the benefit of a competitor to us, for instance. For the other half, it increased. So what does that mean? It means that we have deployed our scarce capacity to customers that didn't need it. But we needed to do it because we didn't know, because we weren't data-driven. Yeah? We also pulled those customers through our financial crime policy, including our client outreach on everything, while there was no reason whatsoever. They're not happy to go through a KYC exercise. I guess you can agree. So is this then an efficiency? No. It's an effectiveness point. Because the question that we should ask ourselves, if we see this 70-30 happening, which clients did have a material change that I haven't looked at because I was focused on the ones for the sake of a timestamp? So this all is not meant to be like an efficiency driver, a cost-saving driver. It's meant to be an effectiveness driver for the next generation of financial crime per the case that I presented, but also just to be on top of the entirety of your customer portfolio, not just the ones that come into line of sight for the sake of a timestamp calendar year. It brings us to the following. So where we today, entity per entity, would be reviewing, CDD reviewing, based on a calendar. So the treasurer, I've been with treasurers in their offices where they almost got thrown out because they were engaged by multiple people from our department out of different locations. Yeah, it could be an operations hub, could be a country, for the exact same copy passport of their CEO. And literally, he was up for his annual review and needed to ask the question for the Xth time. So you can imagine how angry you would be as a treasurer if that happens, right? Because you know you gave it. You know you gave it to your financial institution. Yeah? You go to, we're baselining in what I shared on the prior slide, the customer. You need to slice the CDD pack. You need to digitize the customer file for the first time. To then go into the perpetual mode. So on the top, it is visualized, okay, ID and V. Do I have a new CFO somewhere? Do I see an ownership percentage drop, but I can't find where it went to? I need a client outreach. In the middle, products. I think said enough about what happens there. At the bottom, verifiable evidences. If I would be fully perpetual, but my client would at some point reach the 3-year stage and it would be time for a review, I could say I'm perpetual. But no, hold on. I need to review whether the trust letter is still accurate. I need to review whether the copy passport is still accurate because I could have moved to Curacao. So that would still kick in. But it's not a problem anymore because the customer has his documentation in the vault. If we could just ping a message, could you please reconfirm that this is still the most actual passport? Even when the customer would issue a payment order, we could have a pop-up saying, dear customer, we're going to process your payment order, but please also reconfirm your copy passport. And that is the flow environment that you would want to get yourself in. Now, in terms of KYC, and I'm accelerating a bit because I don't know where I'm in time, it puts you on this. So where you would have been doing your review every 3 years in this example, and then see or do not see something that has happened, you would go to, okay, at some point I see a new CFO coming in. The former CFO was country of residence low risk. The new CFO is also country of residence low risk. Nothing in the behavior changed. Do I need the CDD? I don't need the CDD. I do need to obtain the copy passport as an independent verifiable evidence for my sanction screening. But that's something else than a full CDD exercise. If later I see to stay in the same typology, a new CFO coming in with a country of residence high risk, and I see the payment behavior changing, I see booking officers used in high risk jurisdiction where they haven't been used before under the former CFO, I know I need to do a targeted review on this situation. And that is where you get to. And that is where you are more effective, with less effort, and with much more substantiation in terms of data and case building and audit trailing. That brings us at the end, and I'm going to pull back the aim of this presentation is, so what I tried to say is, yes, we need to be extremely happy on the next gen fin crime capabilities, because we need them, we need to get to the next level. Do we have our house in order? I think so, in the industry. Not always there fully, agreed, but we need to start thinking about how do we enable those next-gen capabilities. If we keep doing the KYC work the way we do it today, and don't make that, I think we can easily say, technology leap, it goes at the cost of the effectiveness of those capabilities. And it could throw us back to where we came from. And I hope that message has landed and you've been able to capture it. Thanks.